This stock is one of the best performing stocks of all time, up almost 28,000%. They don't sell EVs, they aren't a massive retail business, and they don't run a social media company.
And that company is Nvidia Stock, ticker NVDA. This company is a high growth company that has been destroying the semiconductor game. It's one of the biggest companies in the world, and this stock has a huge upside potential in 2023. Now let me get into the format of the video and let's start.
So first things first, you need to know what Nvidia do and where the largest growth markets are coming from for Nvidia. Number two, the financials. I'm going to break down all those juicy numbers for you guys, the balance sheet, the income statement and cash flow statement, and see just what's under the hood of this company. And number three, the valuation. We're going to just see how cheap or expensive this stock is. And number four, am I buying this stock?
So without further ado, let's get into number one and see just what Nvidia do.
Nvidia Corporation is a technology company known for designing and manufacturing graphics processing units, or commonly referred to as GPUs. Their platform is installed in several 100 million computers and is available in every cloud and from every server maker, and they power 357 of the top 500 supercomputers. They are also focused on 4 core markets, including gaming, data centers, audio, visuals, automobiles, including EVs, totaling an estimated 1 trillion total addressable market opportunity. Now, the power of data is only driving Nvidia's TAM growth, and with future growth of AI growing, Nvidia is at the forefront of the next wave. So AI has fundamentally changed what software can make and how you make software. Companies like Nvidia are processing and refining their data, making software and AI even more intelligent. And the next wave of AI is robotics. AI planning actions, digital robots, avatars, and physical robots will perceive, plan, and act. And Nvidia's acceleration, stacks, and ecosystems help bring AI to the world's largest industries. Now, expanding on that, let's talk about the Omniverse.
Now, Nvidia's Omniverse is a software platform that's going to be building and operating within the metaverse application.
Nvidia's initial focus is on industrial metaverses, such as digital twins used to emulate the behavior of products or factories in the physical world. The Omniverse uses a real-time, large-scale 3D database that connects to 3D worlds via the USD, or Universal Scene Distributor. Now, just as the internet connects websites over HTML, the Omniverse connects 3D worlds over USD. The Omniverse is an essential way for the next wave of AI, robotics, and where AI interacts with the physical world. Now, applications built to run on the Omniverse are like portals into the Omniverse virtual world.
So now we know a bit more about what Nvidia do. Now let's break down the financials. We need to get an understanding of just the valuation of this company, what the balance sheet, income statement, and cash flow statement look like to build a better picture of if we should be buying this or not.
Now, when taking a look at the revenue of Nvidia, there's been huge growth from 2018 to now 2023, and it's gone from over 9.7 billion to now 26 billion full year 2022. Now, Nvidia's operating profit has also been massively improving from 3.6 billion to now almost 13 billion full year 2022. And again, we're already on track to beat that from last year. Now, when also breaking down from the pie chart, we can see a breakdown of just how much revenue is being driven through the different various sections. So we have gaming, data centers, ProViz, auto, and OEM, and other. Now, when taking a look at Nvidia's strong cash flow generation, we can see they've been increasing their cash flow like crazy. They've gone from 2.9 billion in 2018 to now 8 billion full year 2022. Now, this free cash gives so much optionality to shareholders, and what Nvidia have been doing is share buybacks. They've already repurchased 5.3 billion in first half of 2023, and they have 12 billion remaining authorized all the way through January 2024. Now, they've already provided a dividend of 400 million, which they've given to shareholders in 2022, and they've also enabled strategic investments in growing their talent and also improving the ecosystem of Nvidia and potentially the AI Omniverse sector. Now, when taking a look at Nvidia's balance sheet, we can see they have huge cash and cash equivalents of over 13 billion. Now, this gives huge optionality, as I mentioned, with free cash flow, and this puts Nvidia in a super strong position. Now, looking further down, we can see they have a current ratio of 2-to-1 in terms of assets and liabilities. Now, this is exactly what we want to see. This means the likelihood of bankruptcy is very low due to their assets being much greater than their liabilities. They also have a long-term debt of 9.7 billion. Now, this is fantastic because that means Nvidia are able to service this debt comfortably. Now, to further Nvidia's strong balance sheet, we can take a look at their total shares outstanding. We can see they've remained pretty consistent, which is great news as shareholders, as we don't want to be diluted. So as they're increasing share buybacks, this is only going to improve our ownership in Nvidia. Now, when looking at their total debt and net debt, we can see their net debt is now negative. Now, this essentially means we have more cash than debt total, and we have 1.4 billion in cash, which is absolutely fantastic to see. And with increasing free cash flow, this is only going to improve our position as a shareholder.
So I think it's pretty easy to say that Nvidia is in a great financial position. They've got great cash on their balance sheet, they're growing huge revenue on their income statement, and they're also generating huge amounts of free cash flow. So why don't we go out and buy it? Well, this is where valuation comes in, and this is my next point. We're going to break down the valuation and just why it may not be a buy or it might be a buy. This all depends on certain values, and this is where I think it to be.
So looking at some key ratio metrics for Nvidia, we can clearly see that their ratio in terms of return on capital and return on equity has been fairly consistent from 2019 to 2023, ranging in between about 30 to 20%. And same with return on equity, they've been returning again close to 50% in 2019, but as we can see, it's kind of been slowly varied compared to 2022 and 2023. Now, the reason I use these key ratios as a valuation point is because Warren Buffett states the return on equity will essentially lead to your return on investment through your stock price. Now, expanding on the ratios, we're going to look at a few of the multiples and the forward multiples of Nvidia's expected earnings. We can clearly see their price to sales is at 19, almost 20, which is absolutely insane. Now, their EV to EBITDA is also 56, which is extremely high. However, depending on growth, this could be a solid valuation. But once I look at the estimates, we'll be able to justify just if this PE is too high or too low. So now let's take a look at the estimates for Nvidia. As we can see in 2023, due to the estimates of ticker, they have them growing at 0.2%, which is obviously not a great sign. Now, just because Nvidia's revenue isn't growing doesn't mean that their profits aren't growing. However, when taking a look at their net income and their EPS normalized, we can see they're expecting a 25% decline, which is clearly not great. Now, this puts the valuation at 72 price to earnings for Nvidia. And due to the growth rate only being at under 0.2%, we can clearly see that is not good enough to justify a 72 PE. Now let's look at 2024, because if we take a look at 2024, we can see they're growing at 10%, and this moves their revenue from 26 billion to now almost 30 billion. However, let's now look further down and again take a look at their net income, and we can clearly see they're close to 11 billion now. However, that still puts the price to earnings at around a 55 to 60, which is again extremely high and assuming no change in share price. And now when taking a look at 2025, we're talking 2 years now, we can see they're actually expecting re-acceleration of growth at 22.9%. This takes their revenue to 36 billion, which is extremely impressive considering they're expecting a slowdown in the next 2 years, and a re-acceleration is extremely exciting. When scrolling down to their net income expected in 2025, we can see the range is at almost 15 billion. Now, this does take the valuation closer to under 40 PE. However, this is still expecting 2 years in advance and at a 40 PE. Now, even with accelerated growth at 22%, I believe the PE ratio is still far too high at the moment, and this assumes zero share price growth. Now, to add, while I can definitely agree that Nvidia is a great business, I'm now assuming much further on into the future, which is much harder to project in terms of growth. So this is where it gets slightly more difficult looking at 2026 and 2027. As the business gets larger, it gets harder to grow. And this is why I believe the valuation is still far too high at where it is currently, about $230. And I think we'd be much better waiting. And this brings me on to my last point. Am I buying?
Now, the truth is, I really like Nvidia as a company as a whole. I think it's got huge growth potential in the markets it's going for, but I believe the valuation is my biggest concern with this company. They've clearly got great financials and a strong balance sheet, so I'm not worried about something like that. However, in terms of justifying the valuation it currently is at, I think we need to wait for it to come back down. Now, I have a price target of roughly around $115, which I believe is fair value. I think if we halve the PE ratio as well as the free cash flow ratio, I believe that gets closer into my sphere of influence of where I would want to buy. Now, a much different point of view, I believe the valuation could be slightly skewed due to estimates being too low in this company. As we can see, Nvidia constantly beat earnings year over year, quarter over quarter, which makes it maybe much lower the valuation than it's currently priced at. They are currently beating their competition hard. However, Intel, AMD could come back hard and potentially buy market share of Nvidia's, which could cause growth to collapse. Now, while I believe that is a highly unlikely scenario, it's still one to consider when looking at Nvidia as a company. So I hope this video has been very informative for you guys. I hope you want to make your own assumptions, not just take mine. I think that this company, from my point of view, is too expensive to buy. However, I would recommend doing your due diligence and working out the value for yourself. If you guys enjoyed this video, make sure you share to a friend, like, subscribe, and I'll see you in the next one.